Hey, it's another water cooler Wednesday.
Yes, it is.
Yes. Hey, everyone. Thank you for joining us. It's another Wednesday.
Hey, Dion.
Hey,
How you doing?
hey, how you doing? All
Okay.
right. It's a little rainy today.
Yeah, I
Uh,
know. We got the
yeah,
sunshine though. Look, I got sun behind me. That's
I know
sun.
I got a little sun too, but it was rainy earlier today. I know it's a lot of Chicago folks saying, "Could it please stop? Please
Yeah,
stop." Yeah, so
and
hey,
south suburbs too.
right. So all right. So my name is Dion Branch, and I am with EXP Realty, and I am here today with
You
Lisa.
got it right. Yes,
Right, I know. I was like, let me think about this for a minute.
right.
Right.
I'm gonna always get my hand wrong though. Hey, it's House Money Mama with Geneva Financial. Lisa saying hello. Hope everybody's doing good today. Staying dry.
right. So today, Lisa, what are we talking about?
We talking about resources. Help.
Resources.
I need some help
Right.
from
So we got a lot of
anybody,
people out
somebody.
here that have homes or are renting that definitely need some assistance, right? And so we talk a lot about how to buy a home, but we also need to tell you how to maintain and keep that home. And
Yeah.
so today we want to just kind of share with you because we know that a lot of people have gone through COVID and
Yeah.
have some difficulties. They're experiencing some difficulties and stuff. And so we just want to make sure that we share with you and keep you updated. Yeah.
Yes, ma'am.
Yeah.
So I don't know how much information you have about the some of the statistics,
Mhm.
for what's going on right now. But obviously, there's a lot of people impacted by COVID, a lot of people impacted directly as well as indirectly, and it's still stuff yet that could possibly happen. So here's what the census survey says from early June of this year. They reported that 3.23 million adults would be somewhat or very likely to be evicted in the next 2 months out of 7.11 million who are behind on rent. The CDC, as you know, has this moratorium thing that everybody's talking about. So, um, because I had never really heard all the specifics about it, I thought it would be good just to kind of give an idea of what that is, how that's looking. So right now, the moratorium itself, it prohibits the landlords from being able to physically evict tenants, but they actually can still file the paperwork. So even if a person has, suffered financial hardship because of the pandemic, the the landlord can still file eviction notices and begin the legal proceedings. So none of
Okay.
that stops. They can still do that.
Right.
Um,
So I didn't know that because I thought things were shut down, but they can now. So is that recent that they can now start to file
well, this
eviction?
article that I pulled it from was written on June 24th. So this
Okay.
should be the most updated information to kind of recap, what they're able to do. I think probably what happened is that we saw kind of a trickle down effect, if you will. The it wasn't that they were not able to make these filings and stuff, but the court wasn't available to take them.
Right.
Right? So, by the pandemic having an impact on that, I think that ultimately worked out in the favor, the renters and homeowners and stuff, because even though they legally have the right to be able to make the filing, but the courts really haven't had the capacity to be able to handle everything. So I think a lot of people just probably haven't. I also think it's been a lot of misinformation. You know, sometimes when information initially begins to get disseminated, stuff gets muddied up. You know, you ever play that game when you was little where you whisper something to somebody?
Right, go all the way down. Right. So I know I've seen that now that the court systems are open. I guess like they're doing court through Zoom. So
yeah.
right.
Yep.
So
Yep. I actually had somebody last year on the deal. The person, I don't know if he died from COVID or not, but it was a seller on one of the houses that one of my buyers was purchasing. The seller died in the middle of the transaction, but his attorney, this is a savvy guy, and he was very motivated, I guess. So he went in, he did some kind of emergency order thing. He went in and got a Zoom meeting before the judge and was able to get a whole bunch of paperwork and stuff together and allowed this guy's sisters, I think, to go ahead and finish out the transaction for him, even though he didn't have a will or anything. He didn't have anything, but they were still able to do that. So yeah, the courts have been figuring out a way to make certain stuff happen. So we are.
So that's kind of like a state sale. So they were able to kind of handle the estate. And
he had already signed the contract, you know, when it was a legal contract. It just hadn't been fully executed because he passed away before it could be done. But it was obvious, you know, that it was his intention to sell the house.
Yeah.
So one thing, I wasn't sure if we mentioned this or not, but just to be clear, that same article from June 24th indicated that they did one final extension of the moratorium and that now was due to expire on July 31.
Oh, okay. Yeah. So July 31st is the date. We don't know if they're going to extend it beyond that, right? But a lot of things are changing. Everything is opening up. So it looks like July 31st might be the final extension.
Yeah. And I think there, you know, that money is getting spent. So here it says that the Emergency Rental Assistance Program made $46 billion available to be able to help. That was just for renters. I don't even think that included what they may have had to help out homeowners, because apparently there's going to be some kind of grant for homeowners too.
Right.
But there was something real specific for, let's see, for IDA, Illinois Housing Development Authority. They actually have a program that's specific to rental assistance. So IOLRPP is an emergency rental assistance program designed to help households in Illinois that are unable to pay rent due to COVID. So it's a tenant-led application, which means that you're the renter, then you're the one who needs to go in and fill out the application. It looks like you have until 11:59 p.m. on Sunday, July 18th, to complete your portion of the application. And then they also will help you. Like, say, for example, if you filled out the app, but then your landlord wasn't doing their part, they work with people like that as well to be able to kind of help them out.
Right.
Now, one of the things. Go ahead.
Last week, Jessica mentioned this to us, right? So this is the program that she shared with us.
Okay.
Is this? Yeah. I think this is the one.
I'm not sure, because I didn't think she mentioned it was administered by IDA. So I'm not sure. I think I'd have to go back and review our interview with her, because I'm not 100% sure. Now, I do know that on this grant, they will cover up to 15 months of your rent. This grant for each individual maxes at $25,000. So if you have up to 15 months of rent that wasn't able to be paid, as long as it doesn't exceed $25,000, they will help you pay that rent. They help you pay back rent. One of the things that I thought was interesting about this was actually the reasons that they had for you being able to qualify. Because, you know, you think of the stuff like, you know, I got laid off, you know, I know I'm no longer working, you know, different things like that. But they actually even had on here reduction of hours. So you're still working, but you don't get as many hours as what you used to because of COVID, you know. So just having a reduction in hours would still make you qualify. For this grant.
There was a lot of people who maybe not really lost their jobs, but just they
Mm-hmm.
just cut them back. Yeah. So.
Exactly. Yep. So they
Mhm.
made that one of the qualifying criteria. Another thing was not being able to find work, or if you have to stay home with your children
Yeah.
because of, the closure of a daycare or school.
Hmm.
They're allowing that to also be a reason that could qualify you. So those are things that are definitely different. I've been very close to programs like this in the past. But so part of my own personal journey is that I dealt with homelessness myself over a long period of time, off and on, off and on, off and on. And I know how a lot of these programs work. That's
Right.
not something that would normally be, part of the
Part of
qualifying
the program.
criteria. Yep.
Hmm.
So that's definitely something that's different because of COVID, specifically that's how they allowed
Yeah.
that to work.
It'll be nice if some of these different changes become the new norm, right? So
Hmm.
we experienced a lot of different things within due to COVID, and so it'd be great if some of these things will stay. So we'll see. Like, what's our new norm, right?
Right. Right. Because we don't know just yet. We still
Right.
waiting to find
Mhm.
out.
Yeah.
Yeah. And so just I thought it was worth mentioning because that the one we just talked about was specific to renters, right?
Yeah.
But they do actually have a program that they're still pulling the pieces together for homeowners. So
Oh,
that one, from what I saw on the site, they're planning on launching that in September of this year. So in the fall, homeowners will be able to get assistance too. And it sounds like their grant will be capped at $25,000 also.
okay. So
Yeah.
that's
So
good, right?
yeah, I didn't see exactly how much they have in total grant money for that one. So I don't know. I know like on the federal level, like, is that $46 billion for renters, but I don't know what it's gonna be for homeowners, how that's gonna work. So let me read this off. Hold on. This was created by the American Rescue Plan Act. It's Homeowner Assistance Fund. So it's a program designed to prevent mortgage delinquencies and defaults, foreclosures, loss of utilities, or home energy services, and displacement of homeowners experiencing financial hardship after that date again, January 21st of 2020. Oh, wait, they do have it. Approximately $387 million
No,
in
okay.
grant money is going to be available for emergency assistance for homeowners. So starting in September, people will be able to apply for that.
No, okay.
Yep. So that should be a good one. Oh, so are you able to type this in so people can see it? Because you can always just go to ida.org and kind of, just peruse the site to figure out the information that you need. But they do have a call center set up, to be able to take inquiries about these. They can be reached at 866-454-3571.
3571.
Mm-hmm. Yep,
Is
that one is for Ida. That's their call center, 866-454-3571. And you can call directly there with questions. They can walk you through the application process. It's actually IHDA, Ida. It stands for Illinois Housing Development Authority.
yeah.
So
Yes,
yeah, they can help homeowners start in September, and renters, you still got until July 18th to be able to complete your application for up to $25,000 in assistance. So that is still available. So what's some of the more traditional things that we could also be able to do? This, right up my alley now.
right, right.
Would really be like refinancing. So there was something that they did actually with the CARES Act, that if you have any kind of government loan, there's going to be some certain parameters now that your lender has to follow because of the fact that you have a government loan. So for example, if you're having trouble catching up, you can do you've probably been hearing the term forbearance. So
Mm-hmm.
typically when I think of a forbearance, the way it normally works, a forbearance is going to be something where they basically give you, a few months off of your payment. And then at the end of that few months off, you have to pay everything. You have to catch it all up. So like, for example, last year I did a forbearance on my mortgage. I was in between from one job and into another one, decided to go out, basically in business for myself with no customer base, no realtors, nobody I could do refinance, and like I had nothing.
Right.
And I knew it was going to be a couple of months before I was able to actually see some commissions start to come in. So I called up my servicer and I said, hey, I need to put my loan into forbearance for 90 days. So they did that, but at the end of that 90 days, by that time, I had a couple of loans closed, so I had some commissions. So I was able to pay those previous 3 months and also the current month, so that it brought me back, where I was supposed to be. So during that time, they did not charge me any additional fees. They did not report any lates or any derogatory information to the credit bureau either.
Okay.
So that's how our forbearance typically works, just a regular forbearance. Now, what's different because of the CARES Act is a couple of things. One, they guarantee that you can do a forbearance for 180 days and that you have the right to extend that for an additional 180 days if you have a government-backed loan. The other thing was, let me see if I can find it. You have the option to, instead of having to catch up at the end and pay everything all at once, like what I just described that I did last year, you have the option to, if you're not able to repay your missed payments and you can afford to pay a higher monthly mortgage for a short period of time, you can catch it up slowly over time. So like, say, for example, your mortgage is normally $1,400 and you were behind maybe 3 months or something like that, 5 months, I don't know, whatever. But anyway, the mortgage financer, what they might do, the servicer, they may add, like, tack on an additional $200 or $300 to your payment.
Okay.
Say 6 months, 9 months, 12 months, whatever it would be, to cure the amount that was, in arrearage. And then after that short, period of time, then you would go back to your normal lower monthly mortgage payment and be on track.
Okay.
So that's a little different. That's not something that they always offer. The other thing is, let's see, you can do a deferral, which puts your missed mortgage payments either to a payment due at sale, which means that if you sell your house or if you refinance your house, that at that time, it's almost like a balloon payment, like that whatever that arrearage was, it would become due at that time when you sell the house or refinance the house.
Okay.
So you not really paying it, like trying to catch up, but you kind of take it and put it off for a later date.
Right. You put it towards the end, or right.
Yep, exactly. That's the other option, because I was going to mention that too. You can get to the end of the loan and then have to pay that higher payment, to bring it all current, for the loan to be considered as paid off in full. So that's another thing. It was one more. Let's see. If you have a sustained reduction in income and you're not able to afford your monthly mortgage payment, you may be able to do a loan modification. Now, back in the day, these used to be real popular. People don't talk about them that much anymore, but they're still available as part of loss mitigation options, that your mortgage servicer will offer. So a loan mod is basically when they like restructure your loan. So a loan modification could be similar to what I just described, where, they take a portion of what you owe and they make a balloon payment at the end of your 30-year mortgage. And then they may put you into some like ridiculously low interest rate, like, a 2% or something, but then you got this really huge amount that's going to be due at the end of that 30 years. Like, I think my mom did that. I'm like, Mom, you do realize that at the end of the mortgage, you're going to have to pay a lump sum of $100,000. And she was like, I don't care. I'll be dead.
Okay. She's like, I left it for you all.
Exactly. For her, she like, it don't matter. They can say whatever they want.
Right.
When I'm dead and gone, they can have this house.
Right.
So that's one thing they could do. Another thing they could do with a loan mod is, have you heard of a term called principal reduction?
Okay. Maybe.
Okay.
Sure. Yeah.
Yeah, so they can do a principal reduction. So that would basically be where, say, if your principal owed on your house is, I don't know, $200,000, maybe they might reduce 30,000 off of it. So now your principal is only $170,000.
Yeah.
So um, obviously, like I tell people this all the time when they're, doing their mortgages and stuff, they can't charge you interest on principal that's not there. So the overall, you're going to end up paying less. $30,000 less in principal on your mortgage is nothing to sneeze at. So
Right. So
yeah.
I wonder if the principal reduction is that really maybe if the value of your home is currently less than what your mortgage is.
You mean
Will
like if you're underwater?
Yeah. So will is that what qualifies you for a principal reduction?
So, I don't think that you necessarily have to be underwater for something like that. I mean, it's one of the options that they really just give as a loan modification. When you request a loan modification, if you're savvy enough, because I used to do these back in the day, I used to help people do these. I've done a couple of loan mods in my history. So, but if you go in and basically you establish what terms you're looking for, you can tell them, listen, the only way this is going to be feasible and workable for me is if we can do this. And then you actually can give them some suggestions for how you want to handle your mortgage from that point going forward. So, I mean, I think it might be a little easier, if you can show that there's like a difference in value and, what's owed and things like that to make an argument for a principal reduction. But there's other ways to make an argument too, as far as like what your income would be. Like if you, like say, for example, if you're retired out now and this is all your income is going to be every month for the rest of your life, now it's not going to make sense, to be able to pay all of this interest on this principal. So it could be a variety of different reasons that you can, use in order to be able to state your argument for why you want to have principal reduced.
Oh, okay.
Makes sense.
Yeah, yeah.
So it was a couple of things that I learned when I was looking up some of these things because I hadn't heard this before. I did not know that your mortgage servicer cannot ask you for proof of your hardship for COVID-19. Yeah. So now that's specific to COVID, because normally a servicer, they ask for all kind of documentation, like they want the cats, social security number, like they want everything.
Right.
But in this case, because it's COVID now, there's a couple of things that they're allowing to be different. So one of the things is that they cannot ask you for any kind of evidence of your hardships. Hey, I'm having financial difficulty because of COVID. They have to say, okay, and send you out the application so you can be able to get some assistance. So they can't ask you, they can't badger you about what happened and why, they can't badger you about all that stuff. The other thing is that, well, this part I did know, but I think it's good to mention. All of this stuff is free. Like I don't know if I haven't heard of anyone offering this as a service or anything like that, where they charge you to be able to do these services for you. But really all of this is free. You can either call your servicer or you can, go to their website. If you're like me, I do my mortgage online. So I'll usually just log into my account and pull any documents that I need to, fill out paperwork and stuff like that. But you can do all of that for free. You don't have to pay somebody for that help. And my experience so far has been that, when you call in, you may have to wait a little bit. I still think they might be a tad bit overwhelmed because it's a lot going on at one time, right? But as far as getting the assistance, they're there and available. I just had, like I mentioned, my own situation happened, and the lady was really nice. She's like, here, here's where you need to go. Let me walk you through it. She walked me through some stuff while I was online, and she was on the phone with me. She'll know when I click on this, go here, do this, do that. So that's what they're there for. That's what these toll-free numbers are for. That's what, the websites are set up. They have specific pages that are just dedicated toward COVID relief.
Right. I think I had two things, even if so if your mortgage still stays the same, but there's a couple of things that we could do as far as tips to reduce your mortgage as well, which is like everybody should always, at least every 2 years, go check out your insurance, like what you're paying on your insurance, because maybe you could go somewhere else and get a better price, and that will lower your mortgage, right? And then
Or just call up your agent. If you
right,
I know a lot of people do Geico and stuff like that, but if you have a local agent, that's one of the benefits of having a local agent. They got your back.
right.
So call your agent directly. Be like, hey, Mr. Insurance Agent, I just want to go over my policy and see if there's any place, where I can be able to save some money and keep my costs low.
Right.
Most agents, especially if they're brokers, if they own a brokerage, then they won't have any problem with shopping out for you and finding a different place where they can place you, so you can still continue to have the benefits of, obviously, if you have claims, then
It's a little difficult, right?
don't expect a miracle, right?
Right, right.
Not or something like that. But if you don't have any claims, then they should probably be able to find you, a different A-rated carrier and insurer that would still be able to handle your business, but keep your costs at a minimum. So
Yeah,
if I have a local agent, I would definitely reach out to my agent and call my agent.
Yeah. And then the next thing, that keeping your mortgage the same, but check out your taxes, right? So make sure that you have the exemptions that you qualify for your home. So
Yeah.
you're a homeowner, you can have a homeowner's exemption. Your senior, I believe, is 65 maybe. And older, you could get a senior exemption. Check it out. We might talk about this another day, right? And then there's a senior freeze exemption as well. And so those things help out the seniors as far as making sure that, one, they can lower their mortgage that way if you still have a mortgage, but also if your mortgage is paid off as a senior, and you can just pay lower taxes for your home. So.
And then, just one last thing. I know we talked a little bit about the government sponsored programs and things like that, but you can always look and see if you may just be able to refinance. I mean, rates are still historically low, even though they've started creeping back up and they're getting a little bit higher. But I mean, when I first started in mortgages, interest rates, a typical interest rate was 8%. 8%.
Yeah.
And now a typical interest rate is probably about 3.625, maybe 3.875, depending on where you go and your credit and stuff like that. But so in the big grand scheme of things and keeping everything in context, rates are still historically low. So maybe you can just look at doing a rate and term refinance, that lower your monthly mortgage. In addition to the same things that Dion just talked about, lower taxes, lower insurance, lower mortgage, you can't go wrong,
Yeah.
And the other thing would be if you've fallen behind, or if you anticipate falling behind, but you think we've had values that have begun to increase now as well over, the past year, because of how the market has been pushing everything up. Investors are coming in, buying up these properties like crazy. They're paying cash and they're paying over asking. And what that's doing is inflating the market. And we're seeing appraised values now that they're starting to come in higher because of the fact that people are actually paying money for these houses at that amount. Okay. So if your house, you could talk to somebody like Dion to do a CMA for you, comparative market analysis. And what that will do is let you know if the value is there in your house, maybe you should do a refinance and take a couple $1,000 out. That might help you to be able to get through this, period of time. Things get a little bit better.
Yeah. So.
And after you get your CMA, call me, because then I can do your loan.
Right. There's always different options out there. So there's a lot of options for us, because we get the house. We need to be able to maintain the house, keep it, right? And financially, sometimes you might have a little hardship, but there's a lot of Chicago programs out here. You definitely can, even if some of them you're not familiar with, you can call us. We can share the programs that we've seen, that we have around, or that we've heard about. So there's definitely different options out there for you. So.
Yeah, because we didn't even get to talk about NHS and CETA.
Right.
They got stuff too.
Right. So we can talk about home repairs, and then also taxes, right? Like, give more details about your taxes.
You know what? I actually have a colleague we may want to bring on. She specializes in that.
No. Okay. All right.
Yeah.
So here you go. You got a tip coming your way. So Lisa White, this is her phone number. You want to get in touch with her? She could definitely help you with refinancing your home right now.
Yeah.
Definitely should check out and see where your interest rate is. It's still low, right? It was
Mhm.
low. now
Low, low.
right. It's low still. So this is still a good time because a lot of people out here, your interest rate might be at a 6, 7, something like
Yeah.
that. Make sure
Hmm.
let's take advantage of that and lower your interest rate.
Yep.
And
I got somebody who's closing tomorrow. We're just lowering her interest rate. She's going to save about $333 per month, I think.
just by that. So
That's gonna
that's
feel so good.
right. That's great. Right. That's great. And so let's say, hey, at the end of the day, right?
Yeah.
We're always here to help you, but if something happens, this is still a good time to sell your house, right? So if you sell your house because you're behind on your mortgage, you probably wouldn't have to sell it as a short sale because, like we're talking about, the market is
Yep.
up. And so
Market
you
up.
might be able to actually sell your house and get some money out of your home and then be able to go to the next place. So there's definitely some options there too. So don't wait till somebody puts you out. Don't
Right.
wait till they that they're just going to give you a little money for your cash for keys, because those are different programs that they offer. When
But that
you're
might not be the best program for you because you could probably get more out of it than cash for keys. Yeah.
right. So talk to a realtor first, because regardless of what you think that your house looks like, it does have value, right?
Yep.
And probably more value than what you think. So,
Mm-hmm.
mhm. So this is Lisa and Dan. We're every Wednesday, Water Cooler
Yep.
Wednesday. So we'd love for you all to join us each week. If you have some topics that you're interested in us talking about and doing some research and finding information or people to come and speak to you about it, let us know, because we love having guests, right?
Yeah.
We love having
Yes,
guests.
that's so much fun.
Right. And we love talking to you too. So even if you want to be a guest and share your experience as far as buying a home and what you shared, we can always talk about that as well. So
Mm-hmm.
love to have you. Thank you guys. Thanks for joining us. This is another Wednesday.
Thank you, everybody.
See you next week.